Hello and welcome. You're watching Closing Trades here on ET Now. I'm Harsh Saita. We're down around 0.4%. Some pressure building in, 100 points lower, and all of the gains of the morning completely wiped out. It's looking like a completely different second half of trade, as you can see on your screen. Within the Nifty, of course, some movers, and let me quickly pull out some of those. IT, of course, under pressure, but Kotak Bank is the top on the Nifty, 3.2% odd lower. M&M, Aisha Motors, Interglobe, it's the auto and Interglobe, of course, and Maruti, Bajaj Auto, Tata Motors PV, which is where a bulk of the pain currently resides. When you're looking at the big movers in positive territory, Cipla, DRL, Max Health, Hindalco, Eternal, they're just some of the movers. So again, what you can see in terms of the tilt is pharma healthcare doing well in trade, while auto is actually lagging along with IT. And let's pull up the sectors. Probably that's the tilt we'll see on your screen as well. Nifty Pharma, Nifty Metal is in the green. Nifty Auto is the top sectoral loser along with IT, which is down 1.2%. Media, oil and gas, and some of the other ancillary sectors also in the red. And you're seeing a bulk of the pressure also start to build with regard to banks, and within the Nifty Bank as well, you've got Kotak Mahindra Bank putting pressure on the Nifty Banking Index. Even outside of that, you're seeing pressure come in. Canara Bank, BOB, PNB, SBI are just some of the other stocks which are under pressure. Again, some of the mid-cap banks doing relatively better. Federal Bank, Yes Bank doing relatively okay. HDFC trading in the green, so is ICICI, but just by a very, very thin margin. Axis Bank, IndusInd trending in the red, but again, it's just a minor cut that we're seeing in terms of the trade. In terms of stocks and within the Nifty 500 basket, again, the advanced decline is looking evidently difficult. You're seeing 170 declines, advances to 330 declines. So 1:2 on the advanced decline. Persistent is the top loser there on the acquisition of Nagarro. You've also seen pressure on NetWeb, Astral on the back of demerger. Supreme, Asahi, Wari Energies are just some of the other big losers in trade this Monday afternoon. You're also seeing some gainers, of course, and within that Nifty 500 basket, Zydus Wellness is the one which is standing out, 9% higher on a Zydus Wellness. So that one is doing really well in trade. That's the one stock which we haven't focused from the 500 basket, which is really standing out. Outside of that as well, plenty of names. Let me bring in Avi though to give us some of the stocks that are buzzing in trade and why.
Some of the stocks that are buzzing in trade, starting off from Dr. Reddy, has advanced rather than declined on account of US FDA completing a pre-license inspection and giving it 7 observations. The street is overlooking these minor observations and is looking at the overall bigger picture as the Bangalore facility holds great significance for the company. So the stock is advanced. Up next is Kotak Mahindra Bank, which has declined on account of Mr. Ashok Vaswani, which is the MD and CEO of the bank, has told that personal reason he won't seek reappointment, and the bank is now finding a successor. Up next is Astral, which is down by around 5 to 7% since it has declared that it will be demerging its chemical business and will be listing it separately on the exchange. It will be named Astral Chemi Limited, and that is the reason the stock is seeing some selling pressure. Up next is Vikran Engineering, which is up by around 10% on account of securing a 3,500 crore EPC order in the state of Maharashtra for setting up a 969 megawatt solar power plant. Our last pick would be Hexaware Technologies, which has been named as Anthropic authorized seller by Amazon Bedrock for global service providing to enterprises for their cloud services.
Okay, thank you for that, Avi. You know, some of the other buzzers I want to quickly mark out. Ajanta Pharma is up 7.5%. Schneider Electric is up 7.5%. Hunasa Consumer is up 6+% as well. Acutas, Aether, Allied Blenders, just some of the stocks on our radar this afternoon. Hunasa has done ever so well, continues to show that resilience. But stock of the day clearly is Persistent, and Persistent has announced its biggest acquisition ever, launching a 1.3 billion euro all-cash takeover of Germany-listed Nagarro. The deal, backed by Nagarro's board, will significantly expand Persistent's European presence. Darshita here with all of the developments and what this means.
Persistent System has announced its biggest acquisition yet with all-cash takeover of Frankfurt-listed Nagarro. And here's why the street is going to closely watch out this deal. Now, Persistent will acquire Nagarro in a deal value of an enterprise value of at around 1.3 billion euros through a bridge financing of about 1.4 billion euros. Now, the deal is expected to be closed by Q4 CY 2026 or Q1 CY 2027. Also, the management expects this deal to be EPS accretive from year one, excluding the transaction cost. But this acquisition significantly expands Persistent's scale. The revenue rises to nearly $2.9 billion and the workforce will exceed to 46,000 employees, with the Europe revenue contribution meaningfully expanding from 9% earlier to now 22%. Also, Nagarro itself generates nearly 1 billion euros in annual revenue. Now, strategically, Persistent gains a stronger European footprint with deeper exposure to automotive, retail and manufacturing, giving the boost to the company. Also, with the digital engineering capabilities and 18,000 skilled employees. And according to analysts, Persistent is paying at around 1.3 times EV to sales with 9.4 times EV to EBITDA. Alongside this acquisition, the company has also secured a $650 million plus US technology contract with a 6.5-year tenure, offering strong long-term revenue visibility. However, the analyst cautions the integration remains the biggest risk challenge. Given Nagarro is nearly 60% of Persistent size, refinancing the bridge, Nagarro's lower margin and its lower growth trajectory are another key monitorables that the street will watch out for. Now, moving on to the brokerages, which remains divided overall. So, MK maintains an ad rating with a 5,200 target price, calling the acquisition strategically compelling, while Nuvama had downgraded the stock to hold with a 4,800 rupee target price, citing integration risk and expensive valuation, while Dalal Capital maintains a sell with a 4,720 rupees target price, highlighting margin pressure, higher debt cost and limited upside. So yes, overall, while the acquisition strengthens Persistent's global scale and European presence, execution and integration will remain the key factors for the street to watch out for.
I think that there is a lot of room for margin expansion. The share price of Nagarro in the thinly traded with very low volumes and all shareholders holding on. I think that this doesn't reflect the true value of the company. And I think Sandeep and Anand are very canny people. I mean, they have very sophisticated finance people on their boards and in their teams, and Vineet and so on. So I think they have reached a very good balanced negotiation. And so I think it's a good. I think it's a great deal. Time will tell, but I think it's a great deal for Persistent shareholders.
Okay, so that's the take coming in from the Persistent Nagarro deal. But let me bring on board Kunal Bothra this afternoon to give us a sense as to how he's viewing markets. Kunal, how are you looking at the day? The breadth not favorable. We're seeing sustained weakness on the index. Would you look through it? You sounded positive late last week. Does anything change on ground?
No, nothing major, Harsh. Just flattish around the 24,000 mark. In the morning also I was highlighting that we may probably just about trade closer to this 24,000 levels plus minus for the indices, because there's hardly any major trend, I think, except for banking index and particularly within banks, also private sector banking names. You don't have too many of the other sectors which are participating. Metals going through a correction. Pharma, of course, is the only sector otherwise which is showing signs of strength. But then most of the other sectors, like metals, etc., they're going through a correction. IT, of course, we all know the reasons for that. So looking at the sector composition, it's just that I would probably believe that we are into that phase of a ranged trend for the indices. 100 points plus minus from 24,000 mark materialistically doesn't change the trend for the index. We need to see evidence of a breakout or a breakdown. The levels which you're watching out for on the upside is 24,250 on the spot levels. We need to have a closing about this level for the Nifty on the upside to confirm a breakout of this trading range. And on the downside, we're looking at 23,750 as a crucial support for the index over the short term.
Okay. And Persistent in particular, Kunal, that pressure on the stock, what should a trader do at this point? Which side of the trade would you sit on?
See, of course, to be on the negative side, or to be on the bearish side, if I can speak so, for the stock price. We were discussing that how I think sitting on maybe the fence could be a better strategy for these IT stocks, because names like Persistent, etc., they were at the midpoint of a trading range. Now, 4,600 was the support for Persistent. Apparently, this level was tested twice or thrice in the last 2-3 months for the stock price. But today, what happened is, when the stock opened with a gap down, it managed to break below this 4,600 levels itself. It started off, in fact, sub 4,600 mark for Persistent, and now the stock has gone to almost 44,300 levels. So, in the process of showing signs of weakness, the stock continues to look weak on the chart. Wouldn't go for a buy, of course, on the stock at current levels, even though there are many points where the risk reward is attractive, the indicators are oversold. But we've seen this for the IT names that over the last 3-4 months, that even with oversold indicators, the propensity of these stocks to make a new low is pretty much on the higher side.
Kunal, how would you play the market therefore now?
See, the bias will still be on the bullish side till the time we don't break below the structural support of 23,750 for the Nifty on the spot levels. It's just that what's happened, Harsh, is that the sector composition is not very consistent. 2 days you have, for example, the banking stocks rallying up. The third day you see a correction, one odd news flow which could impact the stock price for a few odd names. Defense stocks were, the stronger performers till start of the previous week. Now, in the last 4-5 days, we've seen these stocks going through a patch of consolidation. So we need to see more sector trends emerging, more consistent rather emerging as a trend for the markets to show signs of consistent up move. Other than that, I think the bias still remains bullish, but it's bound to be that in this kind of a scenario, you go back again to the drawing board and then you look at the stock specific moves and the sector specific moves only.
Okay. Kunal, any stock bias, any stock ideas per se?
Yeah, so one buy and one sell is what I would recommend. The first one which I would recommend would be a buy on the mid-cap name Finlex Cables. Now, this could be an interesting chart. The stock is showing signs of a potential breakout above 1100, 1150 mark where it's trading right now. So would look at 1190 as a short-term target for Finlex Cables. Stop loss to be kept at 1144. The second would be a sell. In the morning, I flagged off a sell on Angel One with a target of 326 approximately. The stock came very close to those kind of levels. But I would sense that at the current juncture, around 330 approximately, traders could look at a fresh sell opportunity for the stock in the near term, revising the targets to 320. And for those who are looking at a fresh buy, keep a stop loss of 337.
So that's the take coming in from Kunal. What we'll do is slip into a very short break. On the other side, we'll have a chat with Deepak Shenoy of Capital Mind Mutual Fund, who will join us to give us a perspective of various moving pieces in the market, right? And most essentially, it's the biggies. It's the big IT names which are moving today. There is Persistent, of course, and what this deal means. And there's Kotak and HDFC, PFC, REC as well. So we'll talk about all of that and more on the other side. Stay with us. Welcome back, and we have with us Deepak Shenoy, CEO of Capital Mind Mutual Fund, joining us to give us a perspective of how he's looking at markets. Deepak, great having you. There's more certainty now, both on the earnings front as well as from a growth front and from an economy front as well. The only possible, risk factor could be the monsoon, right? That could still play a spoil spot. And from a macro perspective, otherwise, with crude below 75 or Brent below $75, is earnings certainty much better?
Well, I think earning certainty from a perspective of some of the downstream players may slightly change, because you had a quarter. That quarter has not had that has had a lot of disturbances. So this quarter's results may be a little difficult to predict in terms of how companies have been able to manage. Maybe they've taken a hit on margins, they've taken a hit on sales, But I feel that going forward, the path is now clearer in terms of pricing. Commodity prices have also come down, gold, silver, actual metals as well. We've seen a lot of those prices come down. And downstream, I think the impact on usage industries where these metals are being used, that will also kind of come down to that extent. And then going forward, I think availability of a few key critical components, which I think had lost availability in the last few months, that has also started to come back. That supply change, supply easing of pressure will change. What we've heard so far is demand remains quite strong, and it's been supply that's been constraining growth. So I think the commentary in this quarter's results, which will come from maybe 2 weeks from now onwards, that's when we will start seeing something better. So positive, yes. There are risks, of course, whether it's the monsoon, the re-emergence of this war, which seems to be happening almost, every few days. Threats are being passed, and then the impact of inflation on overall interest rates worldwide, which has come down a little bit, but there is still a impact of demand-led inflation in the West, which may cause them to raise interest rates. Those remain risks. But overall, 5 years, I think Indian economy looks quite decent. It will take some time to recover from a stock market perspective, perhaps. So the economy is doing quite well.
Deepak, just from a valuation standpoint, therefore, you've highlighted the risks, you've put out the reward. Talk to us about 18 times 1 year forward, maybe sub 18 times 1 year forward, 17 point something. How does that look to you broadly, given everything that's playing out?
So I think the game is very different at the large caps, and then the mid caps and small caps are going to be behave differently in terms of growth. So I would pay 20 times earnings for companies growing 25% a year. That's because they're growing so much faster. Then I would pay 20, 22 times, even in fact, sometimes even 30 times for something that's growing 25% a year. But I may not pay that much for something that's growing only 10, 12% or just about GDP level, right? So you got the large caps. Some of the large caps are not as attractive. The mid caps and the small caps is where the growth seems to be more disproportionate. So you're getting more attractiveness over there in terms of growth. Just purely speaking at the economy level, for the first time in, I think, more than 12, 13 years, we're seeing credit growth come back in the banking system to 18%. This is quite good because a lot of this growth is actually industrial capex-led growth, and therefore the banking systems, putting money back into corporate hands, which where they're already putting their own cash plus borrowing from banks to pour into future capex. This is a good sign for us going forward because in that sense, the GDP should also grow in nominal terms about 11, 12%. So that would signify reasonable earnings momentum in the years to come. So that way, I don't say 18 PE is a big problem. In fact, when it was 20, 22 times earnings and we were doing no capex growth at all, that was a time in which it was a little more scary. But then a lot of the cash-led, cash-rich economy stocks were doing better at those times. Now it's the capex and the asset-heavy companies that are doing better, or rather having better prospects, whether it's manufacturing, defense, or even infrastructure-led capex. Those companies seem to be doing better. So that there's a dichotomy in that market, and maybe the leadership will change in the coming years. The Nifty will not be what it is today in the next 5 or 10 years. I feel that the constituent mix will change to more asset-heavy companies, and therefore, the earnings growth will probably be more pronounced in more asset-heavy companies.
Okay, I'm gonna before I go to that trend with regard to asset-heavy companies, let me ask you on the private sector banks, Deepak. And there's plenty of activity that's happened over the weekend with regard to those. In fact, we spoke with Atanu Chakraborty as well, and he refused to comment, of course, on everything that's happened. But talk to us. How do you look at, for example, an HDFC Bank? I was just pulling out the upside, and the consensus upside basis all of the analysts that track HDFC Bank, 47 analysts, is 31%. That's the highest I've seen in terms of the upside, 12-month for HDFC Bank in probably recent memory. Talk to us about how you're looking at the leadership changes that are playing out. Is that at all a concern with regard to some of the top private sector banks, HDFC, Kotak?
Not really. I don't know. These are too big in terms of banking system size and in terms of general individual bank size here compared to what they were in the past. At the same time, because of their size, and many of these banks have been a little more retail focused than corporate focused, so they're not benefiting quite as much from this capex rally that I talked about. It is also that the public sector banks and the smaller private sector banks are giving a tremendous amount of competition in core areas where these banks used to earlier, have no real competition, whether it was credit cards or whether it is retail loans. There is a lot of competition, car loans as well. There's a huge amount of competition. And now public sector banks are doing very aggressive expansion into home loans as well. And some of these banks have very large home loan portfolios, which are at risk because some of these, the largest bank in India has merged with its parent, which was the largest home lender in India, right? So these home loans that were vintage were offered at loan rates that was substantially higher than maybe they can get as a home loan as a homeowner today. And public sector banks are actually going to people and saying, listen, why are you paying these high rates? Transfer the loan to me. Anyway, all bank loans against homes have to necessarily be no prepayment penalty. And therefore, you can get out anytime you want. And they are acquiring very aggressively any portfolio where people have paid up, say, 40 or 50% of their principal back already, and their homes have reached some kind of, maybe 5-year vintage in terms of, therefore, they have probably appreciated in price as well. So loan to value is much lower for them. So because of that, I feel the old times of price to books of 4 and 3 will be relatively difficult to achieve in the larger banks. Some of the smaller banks, because of growth, may actually get those numbers, assuming that in the future they will reach some kind of scale. The public sector banks are valued, much lower, and they are being more aggressive. And I think there's some consolidation talks happening over there as well. So I think these are challenges where we should not be married to the 4 times price to book that these banks used to get in the past. The 2 times price to book, 2.5 times price to book is where perhaps they will all end up being in the near future. And I don't think, it's fair to expect a very large margin. Of course, I have no comments on any individual banks, but I would just generally say avoid the thought process that we will go back to the earlier 3x or 4x book rates. We will probably end up much lower than those.
Define much lower very quickly, Deepak.
2.5 times. That's a bull case in any of these cases.
Yeah. But that is still a substantial upside, right, Deepak? 18% growth. Can it flow through to EPS? You reckon? And therefore, this could actually narrow, or rather, the scope for the upsides could go up as a result of the fact that profitability will add to the book value.
So, think of it as at some level, your margins get crimped a little bit. Right. At some level, the growth comes in to rescue it in some way. So the growth will not be as much as that 18% in the first place. But the more important thing is this 18% is not happening the same across the board. There's some banks growing 30%, and the larger private sector banks are probably growing 10, 12%. In fact, last quarter, you saw most of the results were rescued by lower provisions rather than by higher growth or higher net interest margins. They were that philosophy may change this quarter, because in this quarter they will have treasury gains after a long time. But these are not core long-term efficiencies that we're talking about. So I don't think we'll go back to very high NIMs going forward. If you don't have very high NIMs and you have relatively high capital compared to your loans, your ROEs are going to be the order of 13 to 14% only. For that, you should not get more than 2.5 times book. But even that, I mean, whether it's a 15% or 12% or 10% gain from here, I would say it's dependent on the bank's ability to retain its AUM growth and or its credit growth in that sense, and also the way the portfolio performs in terms of whether it's asset quality or whether it is at some level credit costs and margin pressures that would determine which banks do well. There is probably upside in some of them, but I mean, just looking at opportunistically the mid-level private sector and the PSU banks also, some of them may actually be more attractive in terms of growth.
Okay, take a bit of a pause on this conversation. Deepak, Kunal, thanks for being with us. What we're going to do is slip in a very short break, come back, talk a little bit more. I'm curious to know what Kunal's views on charts with regard to some of those private sector banks are, but we'll have that as part of the conversation in the next segment. Stay with us here on ET Now.
Back with closing trades and just taking a look at what the market is doing right now. Exactly 1 hour left for the market to shut shop for the day, and Nifty continues to be under pressure. We're holding above the 23,950 mark, yes, but we've slipped about 100 to 120 points off the day's highest point. 24,000 is something that we've not been able to hold on to, at least now. We have about 60 minutes of trades left. Let's see what happens over there. 4% cut on the Nifty right now, close to 100 points shave off on the spot basis. Sensex to lower by about 350 points. It's Nifty Bank that's under pressure, 0.4%. In fact, absolutely in tandem with the Nifty, and the broader end continues to also be in tandem with the Nifty. The cuts across the board are similar in terms of the quantum that we're seeing. But before the break, we were taking a look at the banking space, particularly the large private sector banks on the fundamental side, and we've got Deepak's view on that. Let's take the conversation ahead with Kunal. Kunal, a quick chart check on some of the larger banks. First, where we've seen developments today, Kotak as well as HDFC, and anything else from the large private sector basket that's looking good on the charts?
See, first of all, I think the overall basket is looking attractive to me on the charts. I've sensed that many of the sector banking names are going through a potential turnaround of sorts, even though it could be a sort of a minor scale turnaround, not a big turnaround on the long-term charts. However, that zone of underperformance where the private sector banking stocks were in the last 3 months prior, that underperformance is getting covered up. So that's a positive. Now, in terms of ranking, when we look at the major larger cap private sector banking names, it's apparently the likes of ICICI Bank and Axis Bank, which supposed to be one of the two stronger ones from the entire pack. Kotak Bank, after today's price correction, has come back below its respective 200-day moving average. HDFC Bank, the stock is still trading just around that 800 mark, but it's sub the long-term moving average. So ranking-wise, I think HDFC Bank still is one of the stocks which is relatively weak on the charts in terms of the relative scale ranking. But then, a few of the other private sector banking names are looking attractive. IndusInd Bank, closer to that 900, 920 mark, apparently is showing signs of good support. So that could be another name. You've seen RBL Bank, Federal Bank. These stocks have also looked very attractive. So it's more the mid cap end of the PSU or the private sector banking names, or the tier 2 large cap names. They are looking more stronger on the charts.
Okay, so those are some of the names that you're liking from the private end of the banking pack on the charts. But Kunal, what about PSUs? Anything looking good from there?
Yeah, I think it's still the likes of Bank of Maharashtra, for example, looking attractive. The larger cap PSU banking names, SBI, etc., they are still trading with a very a very flattish kind of a beta move over here. You've seen a beta of almost 0.8, 0.9 for these PSU banking names. In fact, I think except for SBI, most of the other PSU banking stocks like Bank of Baroda, PNB, etc., Canara Bank, these stocks are still struggling below their long-term moving averages. So we are at a point where the PSU banking stocks have not shown any recovery or recovery, and that's why I would probably believe that I think except for maybe few odd names like Bank of Maharashtra, maybe IDBI Bank to a larger extent, these are the only stocks which one could look at in terms of short-term trading.
Okay, that's Kunal's preferences on the PSU end of the banking pack and how they're shaping up on the charts. But let's pivot from the conversation, take a look at some of the buzzers this hour. And we've got Meryl who's joining us on the show with a list of all the stocks to be watching out for as we speak. Meryl.
Yes, these are some of the stocks that we've seen buzzing in trade today so far. Starting first with Pace Digitech in the spotlight after its subsidiary Lineage Power has signed a 3 gigawatt-hour battery cell supply agreement along with Rongji Energy Tech. Now, this tie-up is aimed at securing a long-term cell supplies for the company. Moving on to the realty space, we're seeing Omax in the spotlight as the company has announced a dedicated hospitality vertical. Now, it's got plans to develop across around 19 hotels across 5 states, and it's investing about 6,200 crores over the next 4 to 5 years into this segment. Now, this move marks a significant diversification beyond the company's existing residential and commercial real estate portfolio. Also in focus in the realty pack is Purvankar. The company has entered into a joint development agreement for a 6.5-acre land parcel in Sarjapur, Bengaluru. And finally, we've got Gujarat Fluorochemicals in focus today. The company's announced a strategic expansion of its refrigerant gas capacity. Now, the objective that has been mentioned in the press releases is to fully utilize its quota under the Montreal Protocol as well as the Kigali Amendment. Now, they've specifically highlighted the R134A gas, which has a high global warming potential of around 1,430, meaning that this gas is actively being phased out by global regulations and with global demand increasingly shifting towards compliant and more sustainable refrigerants. This expansion, while it could capture market share in the near term, it does raise questions of the company's long-term strategy and its positioning in this space as well. So yes, these were some of the stocks that we've seen buzzing in trade today.
Okay, thank you for that, Meryl. Let me bring on board Ruchit Jain as well of Motilal Oswal Financial Services. Deepak continues to be with us. Ruchit, let me first quiz you with regard to Astral in particular. That stock is down 5%, value unlocking story at play, but really not taken kindly by the street. And we take a view from Deepak on that in a minute. But Ruchit, your take on charts?
If you look at last few months, now the stock has not participated along with the broader markets up move which we saw. And today's post gap down, we have seen a good volume-based selling happening in the stock. And generally, whenever we see such high volumes when the price is affecting, those stocks can tend to underperform in the short term. So on charts, at least, it does not look much interesting at current levels to do any kind of bottom fishing. Major support, if I look at a bit mid to long-term charts, comes around 1200 kind of levels where March 2025 lows were there. So maybe around 1200, if it comes, then the risk-reward ratio could become favorable. But at current levels, I would advise not to do any bottom fishing, but stay away from it.
That's the take on Astral. Deepak, hi, I want to get your sense on how you're reading consumption, how you are looking at this pack of stocks, and more importantly, how do you believe consumption earnings are going to shape up in Q1? Because on one hand, of course, you have the raw material impact that has been seen, but price hikes on the other hand have also been taken and mostly passed through. Where do you reckon some of these big staple names will be and how will they perform in Q1?
So I can't say that much about Q1 because it's going to be a rough quarter, I guess, because you got price increases that they had to absorb initially, and then they were able to pass on, and prices internationally also came down. So to some extent, there will be that. If you look at consumer durables, I think the demand remains really strong, whether it's auto or in general consumer durables from ACs and so on. We've had a fairly reasonably strong demand in the recent past. Two-wheeler demand is a little sluggish. Four-wheeler demand is quite robust, and commercial vehicles is also okay. Tractors is not that great, but CVs like trucks, I think we've seen a relatively low increase in this quarter in comparison with earlier. But again, this is going to be a tough quarter to kind of base your future views on the data. I think the data should look better once we stabilize a little bit in the economy. So I think that's one thing. FMCG itself. So here's my general view of the space. There is a lot of competition because there be a lot of competition. Moats are no longer their brand values because people are able to access multiple brands very easily through the internet, through apps, through Instagram and all sorts of things today. And therefore, the distribution muscle of the larger brands is no longer as big a moat as it used to be. So therefore, while there will be increased consumption, I think the benefits will be spread across more players. There will be more competition in almost all segments. And the small areas where you might see some individual brands grow a lot is where there's some level of premiumization. And those are the areas where I think there will be opportunity in the consumption space in the near term. There is, but even having said that, even in the premium categories, the consumption is growing, but there is a lot of competition, whether it's premium clothing, premium, equipment, a lot of FMCG goods as well that are premium. There's a lot more competition than there used to be. So I would say here is where I think the sector will grow, but I think individual players to bet on may not be that such a great idea right now. So I would rather go the durables route than the FMCG route, staples in that sense.
Okay, that kind of sums it up. Deepak, I'm told that I have to thank you, but I'm going to quickly take one question. With regard to IT and this entire persistent story, right? You started to see IT companies in India, large free cash flow, of course, use that free cash flow for acquisitions, right? And maybe that's one route in which they kind of ensure that business doesn't get disrupted in a big fashion. They stay ahead of the curve with regard to technology. You believe that that will likely play out, and valuations don't seem all that expensive with regard to the acquisitions which are at least happening, not core AI, but maybe slightly on the IT services side of things with a bend towards AI, if I can call it that. Do you believe that that's the route forward with regard to some of these companies, and they can well do very well going forward? Persistent view, if at all you can give one.
So I think at some level they have to acquire, right? Because you can't give the cash back to shareholders. It's very tax inefficient. If you're doing a 30% ROE or 25% ROE on some of your businesses, then why are you giving it to us? And I'll get like 7% on that money if I'm a investor. If you give the money back to me, if you're earning 25% on it, then you might as well please invest it and reinvest it in some way. Of course, they don't need cash to run their current businesses. The correct way is to acquire smartly, I guess, where there is integration capabilities and possibilities where you don't over acquire and therefore culture shocks happen and so on. The idea is to also acquire a company whose PE is lower than yours, because if you're valued at a 35 times earnings today and you buy something at 100 times earnings, you'll have effectively a lower valuation on that versus your own valuation. But if you buy something like a 20 times earnings, which is what I think is happening right now, in that sense, it's a little more accretive in terms of your EPS going forward, and therefore, even if the cash levels were to reduce, you're still okay on that front. Risks remain because many countries, especially Germany, do not allow technology transfer to happen from their countries, even if you acquire the company. So it is a complex thing that you have to acquire 100%. Then you have to do a certain deal that certain critical technologies will remain in that country and so on. So there are challenges that will happen even in overseas acquisitions, which is something the market will kind of want to look at on the way forward. We've seen this problem happen in Suzlon earlier when they acquired a German company, and they were denied access to the technology because they didn't have enough of a stake and some kind of approvals. So I would say that those are challenges that these companies will face, but acquisition is the right route for them to generate more value. It's very tax inefficient. It's also inefficient because they have this cash, they can use it to even as a cash hoard to buy some of these AI companies if there should be an oversupply or over investment into the capex zone, into the AI zone in general, that causes downstream bankruptcies. You can get these companies on the cheap, or at least the technology on the cheap, when that becomes available. So having it in their having their cash hoards is useful for acquisitions now or later.
Understood. That's very well put together. Deepak, thank you so much for your time. Such a pleasure speaking with you today. Thank you so much.
Viewers, on that note, time to slip into a very short break. We'll continue the conversation on the markets on the other side. Stay tuned.
Welcome back. And Ruchit Jain with us, so is Kunal Bothra. Let me quickly go across to Ruchit. Ruchit, first call on the index and sectors. What is it that you're finding attractive, and how are you looking at the index move today?
So on the index, we think that Nifty is more into a consolidation phase still. Last more than a week, it's been that the markets have traded within that broad range of 24,200 to 250 on the higher side. And on the low side, the 20 DEMA around 23,900, 850 zone has been acting as a support. So I think no signs of any directional move yet. So we might continue to see some sideways movement in the index. But yes, on a sectoral basis, we are witnessing a good rotation. The pharma has been one space where the Nifty Pharma Index has shown signs of a continuation of the uptrend. Recently, it gave a breakout of from its 1.5 years of consolidation phase. So I think pharma as a space can relatively do well in such kind of markets. So we are advising traders to be more stock specific or sector specific in such markets. On index, we don't expect any directional move on the either side in the near term, but pharma can do well.
Okay, and within that basket or even otherwise, Richard, anything looking good on a stock specific basis?
Yeah, so from the pharma name, Mr. Granules is one stock that we have recommended today to go long on. The high top, high bottom structure is still getting continued over there. Price up move supported by good volumes. So granules, traders can look to buy at current levels also with a stop loss below 770 for potential targets around 850 in the near term. Apart from this, Ether Energy is another stock which we like from the two-wheeler EV space, where irrespective of what the markets have done or what the broader markets have done, we have seen a consistent buying interest in the stock whenever some dip comes. Today also, if you look at the stock, is up by around 5.5%, that too with better than average volumes compared to daily basis. So such pockets where outperformances are there, one should ride that trend. Ether can be bought at current levels with stop loss below 1,000 rupees for potential targets around 1,150.
Okay. Kunal, let me get your view with regard to, some of the buzzers today within the pharma pack. That's the one pack which is standing out in trade. Again, when we started this conversation, you were suggesting that it's been 2 steps forward, 1 step back for a lot of sectors, pharma included, banking included. How do you play a market like this? Do you keep switching? Do you hold on to your conviction with regard to pharma? It's been one of those where you're convinced that the move is sustainable.
Yeah, I think pharma is a differentiated sector. So, that 2 steps ahead and 1 step back for the market, that's generally because of the, most of the sectors underperforming. You look at the plate also, I think defense, realty, private sector banking names, PSU stocks, etc. These stocks are underperforming. So in that aspect, pharma is one of the very few sectors which has seen a good up move. Now, the most interesting bit about the pharma pack, Harsh, is that there are so many large cap stocks in the pharma stocks which are showing signs of breakout. Even if you do a dipstick comparison over the last 4 or 5 days for the pharma stocks, you look at the names which have shown signs of breakout. Cipla has come out into at least like a 7% or a 10% kind of a breakout. Sun Pharma has recovered to 1900 plus levels. You've seen Dr. Reddy. I mean, the stock has today, I think, hit a multi-week, multi-month high for itself. DV Slab, I think, as the stock has recovered from its recent swing lows. So large cap pharma stocks are making a comeback for themselves. Mid cap pharma stocks, they are also on the verge of a breakout or recovery. Many of the stocks like Biocon, Aurobindo Pharma, etc., they have shown some very good recovery. So when you see majority of the stocks, constituents within a sector performing very well, that's the sector which I would believe could probably hold up its trend. But most of the other sectors, what's happening is that you just have maybe few odd stocks, 2 out of 5, 4 out of 10 stocks, which are showing signs of strength. But majority of the other stocks are actually showing signs of sluggishness. But pharma is the only differentiated sector over here. That's why I would believe the pharma sector could be a good sector to try and ride the rally.
Okay, that's the take coming in on pharma. Kunal and of course, Richard, stay on with us. Just taking a look at the market right now, we're about 0.5% lower and we've slipped below the 23,950 mark. It's 110 points lower now for the Nifty. We're very close to the lowest point, which was 23,928. We're around 23,948, so just 20 odd points away from the day's lowest point. That's the way the Nifty is shaping up right now. On that note, time for a quick break. Be right back with more on the other side.
Wow, so you use this trading app too?
Yes, because it promises guaranteed returns.
Guaranteed returns. Your trading app is authentic, right? Here's the catch. First, they promise guaranteed high returns with a grin, then trick you to download a fake app and pull you in.
Well said! Well said!
SEBI and NSE advice. Download apps only from the verified apps list on SEBI's investor site.
NSE द्वारा निवेशकों के हित में जारी। जिंदल सील है तो असली स्टेनलेस स्टील है।
तो जब भी आप स्टेनलेस स्टील पाइप्स एंड ट्यूब्स खरीदें, जिंदल साथी सील जरूर चेक करें।
जिंदल स्टेनलेस, इंडियाज लीडिंग प्रोड्यूसर ऑफ स्टेनलेस स्टील।
उद्योगों की बढ़ती रफ्तार खोल रही है रोजगार और निवेश के नए द्वार। इसके लिए प्रधानमंत्री नरेंद्र मोदी जी उद्योगों को बढ़ावा देकर रोजगार सृजित कर रहे हैं। मध्य प्रदेश में भी मुख्यमंत्री डॉक्टर मोहन यादव मध्यम, लघु एवं सूक्ष्म उद्योगों का जाल बिछा रहे हैं।
छोटे से छोटे और बड़े से बड़े पूरे देश के या दुनिया के हर प्रकार के उद्यमियों के लिए हमने अपने मन के अंदर संकल्प लेकर के सबके लिए दरवाजे खोले।
प्रदेश में विगत 2 वर्षों में एमएसएमई में 12 लाख से अधिक यूनिट, 24,000 करोड़ से अधिक का निवेश और 70 लाख से ज्यादा लोगों को रोजगार। नई स्टार्टअप नीति एमपी इन्वेस्ट पोर्टल 3.0 से निवेश प्रक्रियाएं आसान।
गवर्नमेंट की स्कीम्स का फायदा तो लिया ही लिया, प्लस कई सारी मशीन्स इंस्टॉल करी, जिसके कारण बिजनेस ग्रो हुआ और जितने लोग थे आज उससे डबल या ट्रिपल बोल सकते इतने लोग काम कर रहे हैं।
मोहन यादव सरकार औद्योगिक विकास से लिख रही है प्रदेश की समृद्धि का नया अध्याय।
अरे यार EMI, किराया, दवाई कैसे मैनेज करूं?
एक जुगाड़ है, अच्छा पैसा मिलेगा।
क्या?
अपना बैंक डिटेल्स दो, कुछ लोग पैसे भेजेंगे, फिर उनके बताए अकाउंट में ट्रांसफर कर दो, कमीशन तेरा।
इतना इजी?
अरे काहे का इजी? ये मनी म्यूल है, इलीगल पैसा घुमाते हैं दूसरे के अकाउंट से। ये अपराध है।
अपराध?
जेल के बर्तन धोने पड़ जाएंगे।
ना भैया, जेल नहीं जाना है।
RBI कहता है
जानकार बनिए, सतर्क रहिए।
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
Back with closing trades, and we've also got Mr. Aditya Shah, founder of Hercules Advisors, joining us on the show. And of course, we have Kunal and Richard with us. Richard, very quickly, before I come to you, just want to take Richard's quick view on the entire metal index, because barring pharma, metal is the only other pocket in today's market that's in the green, holding up with gains of about 0.5% for that index. And within that basket also, it's Lloyd, Alco, SAIL, Vedanta, they're the top performers from there. Richard, any view on any of these names or any stocks that you like from this basket, either on the ferrous or non-ferrous side?
Metals as a space have already seen a correction over the last few days, and that's mainly because the dollar index have went up. We have seen a correction in the base metals as well. So there's a direct correlation in the dollar index and the metals. So in such phase where until we see any kind of weakness resuming in the dollar index, I think any pullback moves in the metals would witness some selling pressure at higher levels. So I won't be in a hurry to do bottom fishing just because the prices have corrected from the high. let the dollar index reverse again or see some pressure over there, then I think one should do bottom fishing in metals. The stock-wise, National Aluminum is one stock which is trading at its support post the recent correction prices around its 200-day EMA. So some sort of pullback move could be there. But again, I would take this as a pullback move in metals and not a change in the trend yet.
Okay, Ruchit, IT, would that at all enthuse you?
Not really. In fact, IT would be one space where one, rather than doing bottom fishing, I think one should not mind in case if one has to buy 3 to 5% expensive one after the bottom has been done. Because we have seen that in the past as well, any pullback moves that have come in the IT space, that higher level selling pressure itself has been seen. There could be some stocks which could be there on the watch list, stocks which are not showing any price-wise corrections like Coforge in last few weeks. So I think those stocks are not falling. Those are there on the watch list. But again, the sectoral trend is not turning positive. So until we see any change on the sectoral trend, IT again is one space where should be on watch list, but no signs of bottom yet.
Understood with that, Ruchit. Thank you so much for your time and for sharing your views and your stock-specific ideas with your viewers. So good to be speaking with you today.
Thank you.
Okay, viewers, let's take the conversation ahead. Of course, Aditya has joined us on the show. Aditya, hi. Good afternoon, and thanks for your time today. Give us a sense on some of the sectors that are under pressure today. What about a Nifty Auto? How are you looking at this sector? Because fundamentally, given everything that's happening with the monsoon and how late it's expected to be this year, tractor demand, that is something that's going to be impacted. So is the case with two-wheeler demand, because a lot of it comes from the rural parts of the country. And you've got Nifty Auto trading with cuts of 2.25% today. How are you looking at this entire pack, and anything particularly looking good? Any theme, any companies?
So obviously, it is pretty apparent now that the monsoon will get delayed, and because of this, the rural side of the market will take a hit. So from my perspective, market will adjust to this reality, and a deficit monsoon is something that we are looking at. Having said that, I believe that the auto sector, barring this short-term problem that they have got, the auto sector will continue to do well. I have a positive view on the auto sector. OEMs are really very expensive, but if you look at OEMs, then you can look at something like M&M or something like iShares. Those are my top two picks. Of course, TVS Motors continues to do exceptionally well. It is now the number one player in the EV market as well, but it is really very expensive. But the real juice, the real delta is in the auto ancillary space. Something like a Sona VLW or something like a Motherson as well. Those are the places that I will want to watch. Mind you, these stocks may not give you return over a shorter period of time, but over a longer period of time, I remain positive. First on the auto ancillaries, then on the OEMs.
Aditya, I just want to take a follow-up on that. How are you looking at some of the EV-related names? And I ask you that because we've got flashes on the bottom of the screen saying that the Delhi Chief Minister has said that 15,000 crore rupee investment is going to be made under the new EV policy over the next 4 years. Electric two-wheelers to be registered from 1st April 2028 under the new EV policy, and owners of the BSIV four-wheelers to receive 1 lakh scrapping incentive. How are you looking at some of the EV players, both in the two-wheeler and four-wheeler space? And do you believe now, with all of these incentives coming in from the government, of course, this is just one state right now, but do you believe that this is the theme within autos that's going to be the one to watch out for in the next couple of years?
Absolutely. EV is a long-term theme, or EV will not happen over the next 2 to 3 years. Although companies are coming up with EVs, EV infrastructure continues to remain a major challenge. For example, somebody in Bombay wanted to install a EV charger within their society. The society would not appreciate and would not allow them to install a charger. So from my perspective, it is not a short-term play, it is a long-term play. And within that long-term play, on the OEMs, TVS Motors in their two-wheeler space has done exceptionally well. With their iQube, they have gained now, they have become number one. And Axle continues to do exceptionally well within the two-wheeler space. Within the four-wheeler space, Tata Motors as well as Mahindra are continuing to do exceptionally well there. And as I said, the auto angs is where the juice TV is. Someone like a Sona VLW, where 70% of their revenue is now entitled towards the EV side of the market. Those kind of ancillaries will continue to do well. So yes, EV is a good theme within the auto space, but it is a long-term theme, and short-term there will be little revenues. The slowdown in Europe is also coming to an end. So from my perspective, 3 to 5 years, EV is a good theme to play with.
Kunal, let me come to you with regard to a couple of consumption names and which are a buzz in trade. Honasa is one name, 7% higher on that stock, and Zydus Wellness. What's the view on these two?
Yeah, I think both of them are interesting charts. Honasa specifically, the stock today's move has confirmed a breakout. There was this piece of news flow for Honasa, previous week, and post that, I think the stock has just shown signs of very good strength. Even for Zydus Wellness, the stock has come out of almost like I think a 14 or a 13-week consolidation breakout. This is very positive for both of the stocks over here. So for Honasa, I would specifically look at now, with a breakout above 430 mark, the targets open up for the stock price northwards of 470, 475 for the stock price, which means at least another 5% upside is what we can expect over the very short term. But the chances are that the stock should be able to scale past about these levels quite comfortably and maybe even move towards the 500, 525. So Honasa is something which I would believe traders could be bullish on at the current levels. Zydus Wellness, on the other hand, the stock has confirmed a breakout, even though it's moved up slightly higher from those breakout levels. But I would sense an initial target of 590, 595, and then maybe in the northwards of 615, 620 is what we can look at as a target for Zydus Wellness.
Watch out for, just taking a look at Ather Energy, the EV two-wheeler manufacturer. That stock is up 8%. There's been a spike on that one. It's been doing well all day, but yes, the second half of that stock has picked up some steam. And on the back of this news now, the Delhi EV policy, Ather Energy is doing well. Ola Electric not reacting as of now. Little bit of a surge coming in from the day's lowest point for Ola Electric, but continues to be in the red. Yes, it was lower by about 3.5%. Now is lower by 2.5%. So little correction from the day's low. But Ather Energy to watch out for, 8% higher now as we speak on the back of this policy news that we're getting from Delhi on the EV policy front. But shifting focus then, let's talk about some of the biggest buzzers today. One of them has to be Kotak Bank in terms of the news flow that we've seen, because Kotak Bank CEO Mr. Ashok Vaswani will be stepping down at the end of this year. His 3-year term in December comes to an end and he has cited personal reasons for doing so. Now, Mr. Vaswani, who succeeded the founder, Mr. Uday Kotak, in January of 2024, will not be seeking reappointment with the bank, and the bank is now beginning to search for his successor. Mitali is joining us to tell us how the bank has fared under his tenure.
Big leadership change coming in from Kotak Mahindra Bank, as CEO Ashok Vaswani has decided to end his tenure December 31st, 2026. That will be his last day, as he does not wish to seek the reappointment and continue his tenure further, and he has cited some personal reasons in the back of this. And the bank has now kicked off the search for its next chief, with the succession process set to be completed within the RBI timelines. Vaswani actually took charge at Kotak Mahindra Bank in January 2024, where he succeeded the founder, Mr. Uday Kotak. During his tenure at Kotak, he pushed the bank's technology transformation, sharpened its focus both on growth as well as capital deployment, and also expanded the company's balance sheet. But his stint also came with significant challenges. Kotak faced RBI restrictions on digital customer onboarding, as well as a temporary halt on the credit card issuance. The bank also navigated a slowdown in its microfinance segment alongside a series of senior leadership exits. Even as these headwinds played out, the bank delivered a growth in its customer assets growth, which grew by nearly 15% on a yearly basis, while there was a decline of nearly 14% if you see in the terms of profit after tax for the company as of FY26. So for now, the bank, it maintained its growth focus with the leadership transition which is underway, while Vaswani leaves after steering the bank through regulatory headwinds and also a major transformation phase. The streets will now closely be watching as to who will be the next CEO for Kotak Mahindra Bank as it enters the next growth chapter.
Okay, thank you so much for that, Mitali. Aditya, let me come to you with regard to how you're viewing Kotak. You've written a post earlier today about Uday Kotak Premium getting derated on Kotak Bank. How should one see it now, though? I mean, obviously 4.5 times book was a different league, but you're now currently sitting at what, 2 plus a little bit over 2 times book, and if I take the 1 year forward, it's even lower than that. And if I look at the subsidiaries and the values that they pull out on a standalone basis, Kotak is trading below 1.8.
So definitely, as you said, the market was gung ho on Uday Kotak. Ever since Uday Kotak has left, of course, the leadership continues to be strong, but that premium, that comfort that the market had with Uday Kotak, the market does not seem to have with the other management. Also, the other top management, for example, the head of Federal Bank, they are also from Uday, from the Kotak Mahindra Bank, Cargill. So, from my perspective, the entire top management has left, and the management is being installed, and that is why the derating has happened. From my perspective, this 1.5 to 2 times price to book is a clean area to buy Kotak Bank. Market will wait to see who will be the new successor. Insiders and outsiders both will be nominated, and then the Reserve Bank will take a call. So, from my perspective, there's an unknown in Kotak Mahindra Bank, but given the good quality of book that Kotak Mahindra Bank has, I think it is time to buy for the longer term for Kotak Mahindra.
Okay, so longer term, Kotak looks good at this point. Let me come to you, Kunal. Kotak in particular, I know you like private sector banks in general. This 2-3% knock on Kotak, opportune time to buy? Would you wait a little bit before you buy? When to?
I'll wait a little bit, because, the concern with Kotak Mahindra Bank is that post the special sick pit happened for Kotak Bank, the stock has suddenly gone to a very low beta name. Now you look at, the last, I think, 2 or 3 months, the stock was nearing this range of 390, 400 as a breakout. Now it took almost 2.5 odd months for the stock to really take out this level of 400 for Kotak Bank. And the stock then in the next, I think, 1 month or so moved towards 410, 415 mark. So even after breaking a level of 400 as a major barrier, the stock could just about move another 3%, 4% in the subsequent 1 month. And that too after spending more than 2.5 odd months sub the range of 400 mark. And now immediately after this news flow, the stock has again caved back into the selling pressure and gone below the 400 levels. So this nimble-footed move for Kotak Bank, where the stock has not been able to sustain this levels of 400 very for a durable period of time, that makes the trend a little bit more questionable. So I would suggest a wait on Kotak Bank, let the stock maybe drift down. I would sense 380, 385 could probably be tested in this leg of price uptrend. Maybe at those price points, we might see better risk about originating for the stock.
And Aditya, if I can come straight back to you, you understand banks better than most. What's the take with regard to the banking sector growth that's coming in? It's surprising on the upside every single time. We're at 17.5% now on a YOY basis, where banking sector credit growth is concerned. Can this now, this time around, FY27, one, sustain, and two, can it translate to earnings growth of 15% plus across the board? So basically, will loan growth translate to earnings growth? Is that the right way to now think of it, FY27?
Definitely, depending on this US-Iran war, I am not able to understand if the war is on or not. But base case, the war ends and crude oil comes down, inflation is not a problem. I think that my base case is about 10 to 15% of loan growth, and that flows down into the profitability numbers for most of these banks. So from my perspective, private sector banks together with SBI will remain a growth pick. However, microfinance will continue to be a turnaround pick where you can make high amounts of alpha. However, you need to bet on the right micro lender. It can be Ujjivan, it can be Equitas, or any other microfinance lender which you find can play on this turnaround. So from my perspective, for 27, I'm positive on the banks.
Okay, so that's on the banking space. Kunal, wanted your view on some of the EPC-related engineering infra companies. You've got massive order wins for a Vikran Engineering today that's up about 7 or 8 odd %. KEC International, BEML, Ashoka Buildcon, Transrail Lighting. This is the list of companies rather that they have bagged massive order wins over the weekend. From these names, do you have a view on something like a KEC, a Vikran, BEML, Ashoka, anything looking good?
See, I think Vikran is something which I don't, so I'll skip that. Sure. But KEC, BEML, the charts for these stocks are still a little on the sluggish side, I would say, because what's happened is that there was, the price correction which happened from 2024 highs for names like KEC. The The high for the stock was around 1300 levels in 2024. And in the recent leg of correction, the stock fell down to as much as 460, 470 mark. It's recovered from those marks, but then it's still a little sluggish comparatively with respect to the other mid-cap names or even from its respective 52-week highs. BEML, on the other hand, the stock over the last 6 or 7 weeks, I think has ebbed off from 2000 levels to 1700 mark. The concern for these names is the sluggish trend because we are in that domain of the market where there is hardly any major, follow through, momentum, call what you may want to. But in this scenario, it's very difficult to try and pick these stocks as pure momentum plays. You have to try and buy these stocks at the lower end of the price curve, and then your time period has to be a little extended. So if you're looking at this as a 3 month, 6 month, 1 year kind of a time horizon trade, then yes, these stocks could come out to be a good trade. But momentum wise, there is lack of momentum in the entire sector.
Good. So that's on the entire sector. Kunal, a quick check on some of these EV names that have started to buzz post this Delhi EV policy that we've heard. Something like an Ather Energy or perhaps an Atul Auto, TVS Motors. I'm talking across the spectrum, 2, 3 and 4 wheelers. Anything looking attractive?
Yeah, I think Ather is something to look at because the stock, I think today also I think has confirmed a breakout. So there is this very interesting pattern of higher highs and higher lows. The stock has been forming for the last 5-6 months of the start of 2026, and post that the stock recently gave a breakout of the previous highs of 1060. So chart patterns for Ather are looking a little bit more consistent. The stock has also gone through a decent dip or a correction to try and get good buying opportunity. But if I have to pick and choose the list of stocks from the ones which you mentioned, I think Ather as a chart looks attractive.
That's on Ather. And in fact, that stock is up 8%. Vikran Engineering was the other stock that we were speaking about. That stock is seeing gains of about 5%. And in fact, we spoke to the management earlier in the day, wherein they have reiterated their FY27 order book guidance of 6,600 crore rupees and a very ambitious 10,000 crore rupees order book guidance for FY28. Listen in to what's driving that confidence.
This financial FY27, we are planning to book a new order of 6,600 crore. And approximately 60% will come from the solar and 30% will come from power T&D. And the remaining 10% will come from the water and railway other sectors. Out of this 66,600, we already, with the Q1 itself, we booked net. Our booking for this Q1 is far better now. Apart from this, we have already some 2,500 plus crores. We are in the L1 position. So we are very confident of achieving our order book of 6,600 crores in this financial year. As far as the execution is concerned and our current guidelines, we wanted to maintain the same. Approximately 2,500 crores will be our revenue for FY27. We have just counted FY27 100 crore approximately order from the data center. FY26 will be around 14 to 16% EBIT margin. FY27.
Okay, so that's with regard to Vikrant. Aditya, let me come to you and let me keep it open-ended. What is it that you're liking in a market like this? What is it that you're buying? Chemicals, pharma, banks. We've spoken about banks and lenders, but give us a sense.
So chemicals, pharma continue to be my top picks within the chemical space. These stocks have undergone some correction like Deepak Nitrite, Vinati Organics, Apcotex Industries. All of those stocks have taken a big correction. Within the pharma side, on the API space, something like a Laurus Labs and Divi's Labs also continues to do exceptionally well. If you look at the API space, Newland continues to do exceptionally well. Syngene has undergone a severe destocking phase, but that also looks interesting to me. If you look at the EPC space, the road contractors and contractors as such continue to be something that I really like. L&T is also something that I like, but L&T is very expensive at this stage. So one should look at EPC contractors available at about 15 to 20 times multiple. That is where you should be investing right now. So those are the top picks. And of course, within the financial space, something like banks continue to be my topic. Microfinance space is where a lot of alpha can be created. And mutual funds is something that you could watch. Asset management companies is something that you can watch, where decently priced asset management companies could do well over the period of next 3 to 5 years.
Okay, so that's some of the pockets within the financials basket to watch out for. And microfinance and financiers, basically, Aditya spoke about. Kunal, anything looking good? Perhaps these gold loan financiers, gold has come down. There could be an impact over there. Other than that, anything looking attractive from the NBFC basket?
So gold financiers doesn't look very attractive as a momentum basket as of now. Price wise, yes, Muthoot Finance at 3,000 after a fall of almost 1,000 points, if I'm not wrong, from the Jan highs for Muthoot Finance. I think is definitely an attractive proposition, but purely long term wise or medium term wise as a time frame, NBFC basket. I mean, from the entire basket, I think there are a few names which are now coming back into breakouts. I think L&T Finance very decently, I think, has shown good recovery about 290 levels. The last I had seen for the stock trading about 300 mark. That's a very good chart evolving back again in terms of a potential upside for L&T Finance, both on the short term as well as on the long term chart timescale. Chola Finance apparently has done reasonably well. Shriram Finance, the stock is trying to recover back again from that sharp correction from that 1100 mark where it tested in 2025. Bajaj Finance, the stock is struggling to break past about the 1,000 levels, but I think 950, 960 apparently could be a good price point where Bajaj Finance could be accumulated towards. So there are those odd NBFC names which have started to look attractive price point wise because of the recent correction and with few of the stocks gaining momentum.
Okay, so that's on some of the NBFC names. Aditya, the other big talking point over the course of the weekend was Apple hiking its prices due to the shortages that they've been citing on the semiconductor front. Do you believe that India has an opportunity here? How are you looking at names like Keynes or a CG? Dixon, somebody who has a presence in the chip manufacturing arena, and what kind of growth potential do you believe that these companies have ahead of themselves?
So companies like Keynes, all of the Keynes or Dixon, they have bright future ahead of them with respect to the revenues and the growth that they will come at. However, the valuations today of all of these stocks are really expensive. Keynes at about 50 to 70 times multiple. We've seen about 50% correction in Keynes due to the cash flow problems that they had got, and the guidance from the management was not met. From my perspective, you need to keep watching these stocks. These stocks will give 30 to 40% growth CAGR over the next 2 to 3 years. However, there needs to be a better entry point. You cannot be paying for Dixon. You cannot be paying 40 to 50 times multiple for a company which has a margin of about 3 to 10%. So, from my perspective, good scope growth. However, valuations are aggressive. You need to keep these stocks under watch. Any correction, any further correction could be an opportunity to add this to.
Okay. And would consumer durables be something that interests you at this point, Aditya?
Particularly not. A lot of these companies are really very expensive. However, the wire companies like Polycap, KEI is something that I'm looking out for within the entire consumer space. Although these stocks are also really very
We should
expensive.
in fact do the rebalance.
But growth is really very good here. So something to watch out for, but not at this stage. You need some correction to add into these stocks.
And Kunal, with regard to consumer durables, from your side and wires and cables, let me throw in both of those. Any favorites from within those packs?
Yeah, I think wires and cables is something which is actually looking very attractive. Harsh, I was looking at the charts for Polycap, KEI, etc. The last 3-4 days, these stocks went through a mild corrective phase. Today on the charts, what you're seeing a bullish hammer kind of a candlestick pattern, which is emerged for many of these stocks. And from those levels, for example, KEI was just about at 5,200, 300 levels, and the stock in just the last 15-20 minutes has moved up from those 5,300 levels to now 5,500, 5,600 mark. Same is the case with the likes of Polycab. That's a stock which apparently was almost at 9,600, 700 mark and is now almost 9,800, 9,900 mark. So that's a space which is looking attractive, and especially because of the recent price correction these stocks have had gone through.
Okay, so that is on some of the consumer durable names. And in fact, we also spoke with the management of LG India. They did say that margins are set to improve for the company going forward. In fact, let's go across and listen into what they had to say in terms of their margin guidance.
We as a long-term organization work on more on operational efficiencies like increasing our localization rate, building our own capacities to give a more innovative product for the consumers. That too with their own insights. Our margin front definitely will improve more further. Our guidance is very clear for FY27, which would be in mid-teen digit revenue growth with a early double-digit EBITDA margin. But this is too early. It is only first quarter closing just now. There are 3 more quarters ahead. But we are very confident that we would perform much better what guidance we have given to the market.
Okay, that's the word coming in from the management at LG India. Kunal, wanted your read-through on the Nifty Defense Index. Very sharp spike coming in over there. It was in the red about 15-20 minutes ago, and it's now 0.6% higher. Give us a sense on some of these defense names that have seen this spike. It's Bharat Forge, BL, Midhani, Astra Micro. Give us your reading on these names.
Yeah, and add to that, I think even names like HL, etc., they've recovered quite well from their recent or maybe intraday swing lows. So it looks like more of a short covering move because it's spread across most of the stocks which are underperforming for themselves. So maybe that could be a positive in a sense. But I would believe defense as an overall pack, I'm very bullish on this pack. I think from here, of course, the time frame is not very short term, but the time frame is extended. Maybe at least a time frame of 6 months, 1 year plus is what I would expect for defense stocks. But as an overall basket, I think these stocks are looking very lucrative to me. So if you ask me, I think bullish, one of the sectors which I'll be bullish on, specifically from here on to say the next 1 to 2 years or more, defense is definitely one of the pack. And any kind of a dip or a correction, generally a 7%, 8% dip on large cap, low beta names like BEL, they should be taken as good buying opportunities.
And, Aditya, I mean, you spoke about chemicals, you spoke about pharma. Anything else that's standing out in terms of buy calls?
IT sector is one of the contra sectors for me. Some of the stocks like HCL Tech now, even better dividend yields, even better entry points. However, a staggered entry should be taken. In my perspective, IT is now in the process of creating a bottom. From my perspective, AI will lead to growth slowdown for most of these companies. It is now priced into the stock prices as they have corrected about 50% from the top. So from my perspective, a contra pick would be IT. However, you have to wait for 3 to 5 years. The correction has still not ended. The process of bottom formation is on.
Okay, so that's on IT. Very quickly, Kunal, we've got about 2.5 minutes left. Set us up for tomorrow's trading session. What can we expect to see on the Nifty?
So I would expect more of a price action. So what matters over here right now is that how strongly we hold on to or latch on to this 24,000 mark. We've been doing this relatively well for ourselves in the last 7 days. When I was throwing the start in the morning that 5 out of the last 7 days, we've just stuck around to this 24,000 mark on the Nifty. There were attempts towards coming on the higher side towards 24,100, 24,250 mark, but we've really not, sort of broken this resistance level for the indices. So I would believe that we may just about hang around to this 24,000 mark. But in the process of doing this, you're bound to see those sectors starting to look very attractive. So, a few days back, it was defense, private sector banking names, last week start. Now it's the pharma stocks which are looking attractive. So you might have to try and churn the sectors on maybe a weekly basis. But I think that's where the traders could probably try and take a strategy towards. But benchmark index, I think still flattish towards 24,000 mark.
Thank you, Kunal. Thank you, Aditya. Thanks for coming in, giving us all of those views, and appreciate your time. Quickly, a third of a percent lower on the Nifty 50 index is what we're seeing. So we're down around 78 odd points. Some strength obviously given away since the morning. In terms of contributors, well, far and few on the positive side. Reliance, Kotak, M&M pressuring the index, and so were all of the auto stocks. 2% lower on the Nifty Auto Index at close. Nifty IT was the other big culprit, 1.2% lower on the Nifty IT Index as well at close. When you're looking at broader markets, you're seeing a pressure there as well, around 0.5% thereabouts lower on the Nifty Small Cap Index. The Nifty Mid Cap Index down around 0.1% thereabouts, and 0.5% lower on the Bank Nifty. So that's where the pressure comes from, IT and the Bank Nifty. And the Bank Nifty was pressured by private sector banks, lack of positive triggers there, but Kotak down 3, that pressuring the Axis IndusInd also closing in the red. HDFC Bank opening in the green but closing absolutely flat. So no zing whatsoever available for the banking stocks. ICICI Bank also closing extremely flat. I mean, as flat can get. So that's broadly the way in which things have shaped up. Snehi, but stocks, plenty of stocks. Which
Absolutely. Persistent Systems, the one to watch out for. Massive pressure on that one. The street not cheering this acquisition that they've announced of Nagarro. Then you've had news on REC PFC. The board has received, board has given their nod to the merger. The share swap ratio is out as well. Some of the other high flyers have been some of the smaller EPC companies like a Vikran Engineering, 3,500 crore order win, doing well on that front. We've got Transrail, KEC, BEML, all of them doing well. Dr. Reddy's a very positive move coming in on that stock, and one of the top Nifty gainers today. In fact, it's tempered down from the day's highest point of 4.5% gain, but nonetheless doing well for itself. Then you've got some names like IFL Finance, Precoal, PTC Industries. Astral is the other one to talk about. The board has approved the demerger of the chemicals business into Astral Chemi, but the street once again is not very happy with that. 8% cut over there. Bansal Wire, the other high flyer today, promoter has sold stake in the company. It's going to be absorbed by a lot of DIIs, and 7.25% uptick coming in on that stock as well. Other than that, some of the newsmakers have been Smartworks, Intotech, Amber, Hexaware. Yes, Hexaware was another big one because they've been named as Anthropic's authorized reseller for Amazon Bedrock, so 5% uptick over there. But towards the day's fag end, we've had positive news flow on some of the EV stocks, and Ather Energy, a clear outperformer over there. Just want to see what Atul Auto has also done, because Atul Auto is an EV three-wheeler maker, and Delhi EV policy has been announced, 15,000 crore deployment over the next 4 years, 1.5% uptick for that one. That was Ather Energies that clearly stole the show today. But with that, we complete timed out on this edition of Closing Trades. As of now, it's close to a 0.5% cut on the Nifty. 23,946 is where we've shut shop, shy of the 23,950 mark. But of course, we'll give that rate some time to settle. But on that note, it's a wrap on this edition, and a goodbye from Harsh, me, and the team that put this show together. Thanks so much for tuning in.